Okay, aloha everyone. I'm Evan Leong from Brain Gain Hawaii, and welcome to today's Save Hawaii Jobs and Businesses webinar for April 27, 2020. If this is new for you, we have a resource folder with updated memos and previous webinar videos on YouTube. Please make sure you review those documents before asking questions, since most of the answers are in those documents. Okay, so let me introduce our team for today. We have Jane Sawyer, who's the Hawaii District Director for the SBA and our champion for Hawaii small businesses. Darren Leong is a specialist in employment law from the Law Office of Darren R. Leong. Stacy Katakura is the CEO of Accumulus, which is an outsourced CFO and accounting firm. And Jeff Harris is a senior named partner at the Torkelson Law Firm. We also have Buddy Leong, who's an analyst here at Brain Gain that handles communications in our back end, as well as today's webinar chat box. And Koko Leong, who's our editor at Brain Gain in charge of content, video editing, YouTube channel, and podcast. We're going to take questions through this webinar through the Q&A module only. If you post it in the chat box, you'll get a message from Buddy saying post it in the Q&A box. Please upvote the questions in the Q&A module, and we'll do our best to answer these later in the webinar. Okay? Please note, this is a fully volunteer effort. This team has personally answered hundreds of questions, email threads, and hundreds of billable hours being donated. No one has been paid for the free pro bono work that's been done to help as many Hawaii employers as possible. So please keep this in mind. Legal disclaimer is this information is provided for informational purposes only and is not intended as legal or tax advice. Please consult your attorney or accountant to discuss your particular business situation. SBA's participation in this presentation is not an endorsement of the views, opinions, products, or services of any of the participants, persons, or entities. All SBA programs and services are extended to the public on a non-discriminatory basis. This information is current as of today. So let's start with Jane Sawyer. Thank you.
Aloha, everybody. Hope you're having a great afternoon today. It's been a busy couple days here, probably since Sunday for many of us, as we awaited the rollout of the second wave of the PPP loan program, and that's probably what you're most interested in hearing more about today. This round brought up about $310 billion to follow the first $349 billion that was rolled out in stimulus programs for small businesses. That first program, the loan account went out to small businesses in just 14 days. So Congress stepped up, realizing that they were going to need to put some more money to accomplish some of their goals and objectives. And nobody has known what really this unprecedented pandemic is really going to serve up to us. But we started rolling out these loans on Monday morning, and we're seeing the same kind of progression with the money moving very, very quickly. Now, Congress did segment the loan programs a bit to try and make sure that the loan funds did flow to the very small businesses, rural businesses, and minority-owned businesses as well. So there are some adjustments in the system, and that's proving a little bit problematic for many of the smaller and medium-sized banks. So we're seeing some of that. At the same time, a lot of the funds are flowing and loans are being made to small businesses. We aren't seeing the kind of flow and approval level that we want to see. So we're working really closely with SBA headquarters and Treasury and our congressional representatives to try and remedy that as soon as we can. As of this morning, overall, there were 475,000 loans approved. $52 billion already was processed by 5,100 lenders, and that includes the larger banks, our local banks, working really hard to get those applications processed, and then also credit unions and fintechs that are available for processing. For our smaller lenders, between 10 billion and 50, or excuse me, our larger lenders, they did nearly 84,000 of those loans. The smaller lenders that have assets less than 10 billion did about 331,000 of those loans. And that volume already exceeded the $30 billion cap. So we're all into the bigger pool to draw down money at this time. So we're trying to work on getting those other controls that were put into the E-Tran, the digital system, loosened up and make the flow of capital to smaller businesses through our banks. They're working really hard. They've been at it since the program opened up. There is also money that's going to the EIDL program, and we'll see some of that start flowing later this week. We have seen some progress in getting through the loans there. The first round with the economic injury disaster loans through SBA, we saw 4.3 million applications. And when they ended closing up the portal, about 1.5 million of those have been processed. We see that about 9,000 advances have gone out to Hawaii small businesses. So that means you're in the queue, you're still processing. If you're interested in checking out what's going on with these loans, go to www.sba.gov and you click on the banner on the top for COVID-19, and you can get in to get up-to-date information, learn if the lender portals are open for your application, and if there have been any new changes or adjustments to the loan program. So back to you guys.
Thank you, Jane. So I want to cover just sort of how we've been fighting or helping at least try to fight for this round 2 funding, and also publicly give some credit and props to our congressional delegation. So what happened is on Sunday, the day before the new funding was supposed to go up live, we were alerted that there was a new set of rules being put into place, and it was being touted by the media as a cap put on large banks. And that cap was $60 billion per bank for total funds. And they also slipped in a second rule, which said that large banks, if they had a minimum of 15,000 applications, could bulk upload the entire set of applications at one time. And so when we saw that, we immediately identified it as extremely problematic, because number one, the cap is not really a cap. If it was $60 billion, then that would mean that the largest lender from round 1, which was Chase, would have received 4 times the amount that it did in round 1 before it hit the cap, because they did 14 billion in round 1, and 4 times that amount would be essentially the 60 billion. We also identified that if successful, a bank could essentially bulk upload $46 billion of applications at one time. And being very concerned about this, we reached out to 3 out of the 4 of our congressional delegates who, well, we were in touch with, and they responded very, very quickly. And they have been working over the past few days to raise the flags on this issue internally. What happened is on Monday, the SBA ended up changing. And again, this is the national SBA. This is completely out of the hands of our local office. So the national SBA issued a new rule knocking the $15,000 minimum applications bulk upload. They took it down to 5,000 applications bulk upload, which still would not help Hawaii at all. And said that there's a time limit of 9:00 p.m. Eastern time to accomplish those bulk uploads. It appears from the limited information reported by the news today that those bulk uploads do not appear to have either gone through or are not being accepted. So at this point, it looks like today, National SBA has essentially said they're abandoning that approach and going back to the one-by-one approach. The other thing that SBA is doing is putting essentially a frequency filter onto E-Tran, which is intended to slow down any particular bank in terms of how many applications it can upload in 1 hour. On the surface, that would presumably be a good thing for Hawaii because It would slow down some of the very, very big lenders in terms of how many applications they can push through. In practice, the last day and a half has been very, very difficult, as we understand it, for our banks. So at least it appears to be somewhat more of a level playing field, but our banks are working very hard with both local SBA and internally to get as many applications in as they can. If we see publicly published numbers from any of our banks, we will roll them out to you guys. But that's a long-winded way of saying that we are watching this closely and trying very hard to get as many dollars into Hawaii as possible. Okay, on to some of the substantive questions. And just as a preview for the kind of remainder of the hour, a few things that we are intending to cover. I'm going to cover in a minute a memo that we just published today on the Google Drive for the certifications in the application and meeting those requirements. We're talking about some of the tax implications and a few of the forgiveness issues. Spoiler alert, there are no official guidance yet from SBA or Treasury on forgiveness rules. We, I think, still expect it sometime this week, but if that is the number one question, that is the one that we're still eagerly awaiting. So I'm going to hand it to Jeff for a few questions. First is, Jeff, the PPP has dropped the requirement that a business, not have credit elsewhere from the requirements to get a PPP loan. Do you want to add some commentary on that?
Simply to say that although a borrower that has a loan is going to need to document their use of the loan and allowable purposes and a need for that loan, one of the things that the statute itself says you're not going to have to explain away is your ability to get credit elsewhere. The statute itself says credit elsewhere during the covered period, the requirement that a small business concern is unable to obtain credit elsewhere is defined in 3H shall not apply to a covered loan. So my interpretation of that is, sure, if someone pushes you later and say you really didn't need that loan, the certification that you gave that loan was necessary to maintain your business is not going to look behind whether or not you could get a loan and what impact it would have on your business. That said, both Darren and I agree that as you look at the memo that we published, that would be one of the sort of questions that you should analyze and be prepared to answer. Was I illiquid enough? What were bad things going to happen to my business sufficient so that I, in good faith, applied for that loan? Darren, do you want me to go on now to the forgiveness issues or handle those later?
Yeah, Jeff, can you talk about the actual mechanics? The statute does have some helpful tidbits on what documentation is going to be required to be provided to the banks. It's actually in the statute. Do you want to cover that?
Yes, Darren. No matter what sort of items will be forgiven and what you're going to use them on, at the end of the 8 weeks, the bank's not going to be able to. The bank is going to be the entity that initially decides the extent of the loan that is forgiven. And the statute itself says you must be prepared to provide specific documentation to the bank before they're allowed to forgive. And that's in 1106E. And it's worthwhile going through the list. It's a documentation verifying the number of full-time equivalent employees on payroll and pay rates for the entire period, payroll tax filings reported to IRS, state income, payroll, and unemployment insurance filings, documentation including canceled checks, payment receipts, transcripts of accounts, or other documents verifying payments on covered mortgage, obligations, payments on covered lease obligations, and covered utility payments. And then there are several certification requirements. The reason we're emphasizing that now is your accounting of those payments that you're making from the covered loan that you would like to get forgiveness on. You're not only going to have to be careful about where you make those payments and for what purposes you make those payments, Darren, but you're going to have this specific documentation before the bank's even allowed to forgive any part or all of your loan.
Thank you, Jeff. I think try to write myself a reminder. We'll go ahead and update the forgiveness memo to include the items that are listed in the statute as the documentation that is going to be required to provide. One more question, Jeff. Switching gears slightly, do you want to provide some update on the interaction of unemployment insurance to PPP?
Okay, I was pleased to hear our Director of Labor, Scott Murakami, report this morning that at least approximately 40% of the unemployment applications that have been filed since March 17th, have been decided. Some have been denied, some have been granted, and the ones that have been granted, individuals have received both the state benefit and the corresponding federal unemployment benefit. That implies that the other 2/3 of the 150,000 or so people that have applied for unemployment have not had a decision made yet. And the director this morning reported that they are enlisting other public workers to join in that effort to make the determinations. The paperwork that we've seen on those determinations is unusual, and they're working through this difficult process apparently in new ways that we're going to learn about as they move on. The other point that I'd like to make is if you do indeed have a loan and you do want to work on forgiveness, I can suggest, other than pro bono or maintenance or cleaning up your workplace, I know one area that you're going to need a lot of help, and that is apparently on your accounting staff. Your accounting staff is going to have to help you document the uses of these loans and put together the paperwork that we just described. But the mechanism there is as we've described previously, you're going to want to give a specific written offer to the employee and offer them just about their full wages. And if they reject that, you're going to advise the unemployment office, and that employee will qualify for neither the state unemployment or the corresponding federal unemployment if they reject the offer. Anything else you want to cover on the unemployment, Darren?
Sure would be helpful for the accounting staff if the Treasury would issue some guidance on forgiveness. Yeah, no, I'm just being sarcastic. I'm sorry.
Yeah.
And of course, it's been a long month.
You and I can really get them to do that, can't we?
Yeah. Okay. Thanks, Jeff. So let me switch gears to the certification memo. So we published on the Google Drive. I think Buddy has either posted it or can repost it to the chat now to put it front and center. I think the link to that drive is also in the email blast you folks received. We hesitated quite a bit on whether to publish this because in no uncertain terms are we telling you to either keep or give back the money. We are just trying to make sense out of the complete ambiguity provided by Treasury as to what standard you're actually going to have to meet to meet the certification that the loan is necessary to maintain operations. So what we've done in this is to try and extract the key terms that would be factors in establishing that a business needs the money to maintain operations. So I would start by going straight to the application form, okay? And there's 3 certifications in that form that at least caught my attention. The first one is that all SBA loan proceeds will only be used for business-related purposes as specified in both the application, the loan application, and also consistent with the Paycheck Protection Program rule, which is essentially the law. The second certification is the big one, which is that economic uncertainty, current economic uncertainty makes the loan request necessary to support ongoing operations. The third certification is that funds will be used to retain workers and maintain payroll, or to make mortgage interest payments, lease payments, utility payments, again, as specified under the Paycheck Protection Program rule, which is essentially the law, the CARES Act. And those are the certifications you're gonna meet. There's been all kinds of threats coming out of the national Treasury on this issue, sparked, I think, in large part by news coverage of the Los Angeles Lakers taking a loan, and Shake Shack and all the rest of it, and some other coverage about other large companies who are saying, too bad we're keeping the money. And all of that has caught the attention of the media, and therefore kind of filtered its way back up. And so the word coming down from Treasury is that every loan over $2 million will be audited. That's automatic. So that rule has been issued today. So if you are in a company, and I will note that to hit $2 million, that is, for a number of our companies, that's not large for Hawaii. It's sort of in the mid-size of some of these companies. So if your loan is over $2 million, you will be audited. If your loan is under $2 million, you might be audited. And they're basically saying, you need to comply with this certification that it's necessary to support ongoing operations, whatever that means. So the other points at which we glean sort of factors to support come from the Treasury Q&A, which we've included in the memo, and we cited to last Friday, which is a Q&A directed at large businesses, but talks about having adequate sources of liquidity. And Treasury has repeatedly now talked about companies with adequate sources of liquidity, implying that such companies likely do not meet the certification requirements that the loan is necessary to maintain operations. However, that Q&A also drops in other language. So they say that you should take into account, quote unquote, current business activity, that also you should take into account ability to access other sources of liquidity sufficient to support ongoing operations in a manner that is not significantly detrimental to the business. So they add another clause in here that's not defined that says liquidity matters, but it also matters whether accessing that liquidity or that money is going to be significantly detrimental to the business, okay? Then there was another Q&A today. That Q&A is very short, so I'll read the entire thing, which says, do businesses owned by private companies with adequate sources of liquidity to support businesses' ongoing operations qualify for a PPP loan? And the answer is, see response to FAQ 31. So what you can glean from that is that, again, there's an emphasis on adequate sources of liquidity, and that businesses owned by private companies, that is going to get some extra scrutiny, but I think you can tell by my tone, which is getting increasingly sarcastic as the weeks go on, that Q&A 37 is not particularly helpful. The other two are, I think, very, very helpful, which is interim final rule number 1, which states that the Act's overarching focus on keeping workers paid and employed. Interim final rule number 1 also talks about Congress's overarching goal of keeping workers paid and employed. And on this point, when we're talking about a lot of ambiguity over whether you should or should not keep the money, and whether you can meet these certifications, then I sort of go back to the core purposes and principles of the PPP as the safest place to be, which is that if what you're doing is keeping workers paid and employed and meeting Congress's overarching goal of keeping workers paid and employed, that's going to be looked on more favorably than if you are not doing that. Interim final rule number 4 also includes a quote unquote safe harbor that says if you give the money back by May 7th, that they're essentially not going to do anything bad to you. And they call it a safe harbor. So what can be gleaned from that? Well, for those businesses that end up keeping the money, they may consider some kind of declaration, which I think is Jeff's stance on this, or just an internal memo, which I think is my stance on this, presumably from the person who signs the application, because they're the one who made the certification, that tries to lay out facts that support each of these aspects of the certification requirements. So first of all, describe the current economic uncertainty and how it affects your business, right? How is the shutdown affecting your business? Are you required to be closed? What is the expected duration that you think is going to be caused? Again, the focus is on demonstrating economic uncertainty, right? What's going on with your current projects? What's happening with your customers right now? What are your revenue projections over the next few months? The more uncertainty is in each of those answers, the more you should be able to establish economic uncertainty or current economic uncertainty. The next factor, I think, is necessary to support ongoing operations. And I think we've sort of increasingly become focused on the word ongoing here. So describing what it takes to maintain ongoing operations, how employees are necessary to support those ongoing operations. How is money that's needed for rent or utilities or other things needed to keep operations going, to support ongoing operations? And describe how that, what your expected drop in revenue is, and how that expected drop is going to cause you, or has caused you already, to engage in layoffs. Because again, it goes back to the purposes of the statute. Describe how laying off employees brings uncertainty and whether you will be able to get them back later. So in other words, if you have to lay off employees because of the economic uncertainty, then ongoing operations may be affected because you might not be able to get that employee back later because they're not on your payroll. So it's another factor. Next factor, retaining workers. How are the funds used to retain workers? And we go back to the 75-25 rule. If you are using the money 75% to retain workers and 25% for those non-payroll costs, then describe it. The next one would be maintaining payroll, which is very similar to retaining workers. But when we talk about maintaining payroll, you're talking about maintaining payroll levels. So it's not just keeping the workers, it's keeping them paid at level. And describe again how you are paying each of these workers at least 75% of their prior wages, and how you are keeping them on staff. Also, how you're using the funds to make mortgage interest payments, lease payments, and utility payments. The next factor would be current business activity, which comes straight out of the Q&A. So on this one, what is your current business activity? Because that is a factor in whether you meet the necessary requirement. So are sales down? And I think the answer pretty much 100% across the board, or 99% across the board, is yes. Well, how much? And how much are they down compared to your fixed expenses if they're particularly high? What are your short-term projections? So we glom on very heavily to this term current business activity because we think that gives the door open to make an argument about the factor that we think is the one that really should carry the day, which is that if you're expected to have substantial loss in revenue as a result of the shutdown, and that will cause you to lay off workers, then, you know, PPP will cause you to bring them back. I think that falls right under current business activity. And then finally, and this one is the big one because it's how Treasury has focused on this issue, is the company's sources of liquidity. Jeff, Stacy, and I have debated whether it's external sources of liquidity, loans, et cetera, whether it's the ability to raise capital externally through stocks, whether it's cash on hand. I'm not going to take a position on that now, other than to say Treasury is definitely said other sources of liquidity matter. And the caveat, though, to that is they're saying other sources of liquidity, if you tap into them, would it be significantly detrimental to the business? So if pulling on a gigantic line of credit is going to cause severe harm to the business, or if you have cash reserves, which might be other sources of liquidity, and you drain them to keep your employees on payroll, can you demonstrate that that would be significantly detrimental to the business? The more you're able to do that, the more you would be able to meet the certification requirements. So again, these, you know, we're dealing with a whole bunch of terms that are undefined, an increase in ambiguity that has been rolled out through the guidance over the past week. And we are trying to bring kind of something into focus so that it is useful to the extent that you're going to try to establish or make sure that you're ready to defend your business if you are challenged on whether you met the certification of necessary to support ongoing operations. One sort of last tidbit, and then I'm going to pass it to Stacy, and then we'll take some Q&As, is this never-ending question that's coming up about whether you can use funds that are unused past June 30th. There certainly has been all kinds and manners of thoughts on this floating around. And so I think at this point, I've gone over it quite a few times, but I'll give the summary, which is that I think until Treasury and SBA officially say through some kind of document that you are allowed to use unused funds past June 30th, I think there is at least some risk attached to that. We've done a very, very thorough legal analysis of this. We acknowledge that a number of others have differing views of all sorts on this, and so you should consult your own attorney or tax advisor on that issue. And if Treasury or SBA give an answer, we will roll it out to you. Okay, Stacy, state taxes and how PPP will be treated for state tax purposes. Can you provide an update on that?
Sure. And I want to, before I do, I just want to add on to what you just said, in that the borrower has really the bulk of the responsibility in making that certification. It's the borrower's responsibility to be able to calculate forgiveness, the loan amount, and certify that you've done everything that you can to qualify forgiveness.
Sorry, I'm gonna interject just for a second, and sorry, and then hand it over. It's to the extent a bank tells you that, you know, this, that, or the other, just know that the banks have been given essentially immunity on this issue. The Q&As make it very clear that the certifications are not on the banks, they're on the borrowers. So, you know, just because you get some kind of informal guidance from a loan officer or someone at a bank, I do not think that absolves you of all risk. The certifications are clearly on the borrower, and that responsibility falls squarely on their shoulders and their shoulders alone. Sorry, Stacy, go ahead.
That's okay. That's okay. You said it much better than I was trying to say it. So, so the taxability of the PPP forgiveness, the loan forgiveness, as you know, is exempt from federal income taxes. there was a question I saw in the Q&A module that asked how to report that on your tax return. Presumably, when the 2020 tax forms come out next year, there's probably going to be a special line for it, because typically the cancellation of debt income is taxable for both federal and state income tax purposes. I did bring this up, I think, on the Friday webinar, but I wanted to bring it up again. There is currently some discussion, at least some advice being given by the Department of Tax from certain practitioners that have been asking whether or not the loan forgiveness is going to be subject to GET. And we did see a response come back that stated their position initially that the cancellation of debt income is taxable for state income tax purposes, and they're still not sure about what their position is going to be for general excise tax purposes. So again, I think I said on Friday, but I wanted to reiterate again, the ultimate decision is going to be made when the legislator issues its conformance with the federal law early next year. So I would urge you to contact your legislators if you're concerned about having to pay both the state income taxes and the GET. I would urge you to contact your legislators and voice your concern. I am in the process of we've talked to the Chamber of Commerce, and I think they are lobbying. They're deciding whether or not to write a letter to the governor and to the legislatures. I wanted to try to see some of the letters out there and try to provide a form letter for our listeners in our Google Drive. If you guys want to grab that later and use that to voice your concern with the legislators. I think it's going to be pretty easy to have the state income tax conformity to federal law. I think just considering where the state is with the loss in revenues for GE tax purposes, that might be a little bit harder of a win. So the more that I think business owners can voice their concern about having to pay the GE tax and the state income tax, the better our chances are going to be of getting that much needed relief. And then secondly, I did touch last time on the employee retention tax credit, and as well as the payroll tax deferral and its interaction with the PPP. I do realize I'd probably talk a little fast, so I wanted to go over it again. So if you are taking the employee retention tax credit, you're not eligible to apply for the PPP. The employee retention tax credit is essentially you take a credit of up to $5,000 on your employees' wages, and the way that you take their credit is you file it on your Form 941, which is your employer the FICA and federal tax withholding. The payroll tax deferral is a little bit different in that you can use the payroll tax deferral up until the point that the loan is forgiven. So for businesses that are closed and you have a serious reduction in revenues or cash that's coming in, and you've also taken the PPP, you can consider using the payroll tax deferral, which is just limited to the employer portion of the FICA tax, which is a 6.2%. You can continue to utilize the payroll tax deferral up until the point that your loan is forgiven, at which time presumably you would have to repay the entire amount. And the way that you take the payroll tax deferral is the same as employee retention tax credit, and you just would have a reduction on your Form 941 to the extent that you have a tax liability to take it against. If you don't, there is a form out there, I believe it's a 7702, but there's a form out there that you can use to request a refundable credit. I think that's all that. One more thing I wanted to cover too. On Friday, the Treasury issued a new guidance called How to Calculate Maximum Loan Amount on Friday, which is a couple of days before the SBA portal went open to be able to take more applications for the PPP. really, really late because I think, it came after the first round of funding was gone. I think some of the guidance in the how to calculate the loan amount was repetitive to what they've issued earlier. I think the primary clarification that we saw in it was it finally defined how to calculate partner compensation, partner payroll, because partners are typically not on payroll, and that's basically the net earnings from self-employment that would otherwise be reported on your Schedule K1. I believe it's box 14A, which basically defines it as any guaranteed payments that a partner's taking, plus any net income or loss from ordinary business. It does, and also it excludes any draws. So it does not take into consideration any distributions of profits. And secondly, it also defined how to calculate a loan amount for an LLC. And basically it just says it defers back to however that LLC is taxed for tax purposes. So if you're a sole proprietor, you would look at how the guidance outlines this, how to calculate sole proprietor income. If you're a partnership, it goes back to the partnership calculations. And if you are a C Corp or an S Corp, you would look to those guidance. So that's it for me.
Thank you, Stacy. So what are there was a lot of guidance issued on Friday. None of it was about forgiveness. So Stacy covered how can you calculate payroll costs. For completeness, I'll cover the guidance that was issued. It's a handful of other items. While I'm doing that, Jeff and Stacy, if you can take a look in the Q&A box if there's anything that you folks want to cover. And there were a couple of questions that I answered in writing that I'll recap here. But Friday's guidance was that housing stipends are part of payroll costs, that if you have a question of whether someone's principal place of residence is the United States, for the purpose of including them in your PPP, that there is an IRS regulation on that. Farmers and ranchers may qualify for PPP loans. Hedge funds and private equity firms are not eligible for PPP. Hospitals with minority state or local government ownership may be eligible. Legal gaming businesses may be eligible. ESOP participation does not trigger affiliation rules between the business and the ESOP. So in many cases, the ESOP company is sort of its own separate thing, housing, assets, etc. And those are not counted together. So for purposes of counting toward the 500 employee rule, ESOP participation does not trigger the affiliation rules. And then finally, businesses in bankruptcy are ineligible. The two biggest forgiveness questions that remain unanswered, but I will recap them here because we get, a lot of questions on these two things repeatedly still. And we think that the forgiveness guidance, once it's issued, will answer them. The first is that relates to costs incurred and payments made. So for forgiveness, the expenditures have to be within the 8-week period following loan disbursement. And it needs to be for costs incurred and payments made. That's the exact language from the statute. What we do not know is whether that is literal and whether it will be deemed to be everything has to be both incurred and paid in the 8-week period, which doesn't make a lot of sense to us because, for example, retirement is probably incurred well before the 8-week period, but might be paid out in it. Vacation is probably accrued before the 8-week period, but might be paid out within it. Certain work hours will be done before the 8-week period, but paid in it. Sometimes there's payments within the latter part of the 8-week period. Maybe you have to pay your rent ahead of time. All of that is unanswered. So we think there has to be some kind of guidance coming up out on that soon. We know that it's a frustration for people because we see lots of questions about it, and we just do not have the answer. The second one is, what is the definition of a full-time equivalent? And Treasury issued guidance that clearly delineated between just an employee and a full-time equivalent. They essentially said they're different. And then they did not provide a definition of what a full-time equivalent is. So that leaves us without a definition, and we eagerly await Treasury, National Treasury, and National SBA to provide us guidance on what that means. With that, I will pass over to, let's go to Jeff, if there's a Q&A that you want to jump on.
Many of the questions have to do with cost incurred and payments made. And as you mentioned, for example, retirement plan contributions that are made with your tax return in 2020 are most often for obligations incurred in 2019. So we'll need some guidance on that, just like we will on vacation. And indeed, there were several questions on how about if my payroll spans the loan disbursement date. And my advice on that today is use your money out of your separate your separate PPP account, or be able to account for the portion of the payroll period that you use PPP funds for, and pay the rest of that payroll period that began before the loan disbursement from somewhere else. We may get guidance that allows for payment of obligations incurred before. I think it's less likely that we'll get guidance that allows forgiveness of payments made after the end of the 8-week period. We may get guidance that says you may use the payments for allowable purposes after the 8-week period, but we just don't have that yet. Darren, I'm having some internet difficulties.
Okay.
But
Well,
the other thing that I'm getting a lot of questions about is we're piquing the interest in the rules and the statutes by talking about them, and I'm not sure that we have all the statutes and the Q's and A's and the regulations on our website. We may either want to link to where those matters are, those details are available, or include them on our own website, because there have been a variety of questions on folks wanting to look exactly at 1102 and 1106 in the Q's and A's.
Yeah, so I would point to the Treasury website, which has essentially now congregated all the materials together. I think other than the statute, but all the guidance materials, and actually they continue to update it and have made it better and better and better. So on this front, they have made it simpler, cleaner, and they have the dates on there. It's just getting that one in particular has actually gotten quite good. Stacy, any sort of final words on any of Q&As or anything you wanted to address?
I did see a lot in the Q&A. A lot of people are asking how to check status on both the PPP applications and the EIDL. So I just kind of address that in two parts. So the PPP loan, as most of you are aware, you apply to your bank. So if you need to check on the status of it, if you haven't heard from your banker, I would try to call the bank. If you don't have a banker, call their general line. I think we tried to emphasize with you on previous webinars that there were a lot of you that we heard of that went with certain banks that applied with certain banks on the first day the applications were open on the 3rd, and didn't get your loans approved. If you haven't heard from your banker, we encourage you to look at all of your options. There are banks out there that are taking applications from non-customers. There's also all the fintechs that are out there that the PayPals and the like that you can consider using as well. So if you are not successful in hearing back on your application, you don't have a lot of time. I think that the funds are probably going to be gone by the end of the week. So get your application in with another bank that you feel you might be more successful with. So that's what I wanted to say about the PPP. I think with the EIDL applications, I saw a lot of questions on there about how to check on the status of an EIDL. I'll just make a couple of comments, and then I don't know if Jaden wants to jump in. But what we've been seeing is, I think that in the last week or so, we've seen a lot of companies get funded with the EIDL advance. The EIDL advance was up to $10,000. And it was calculated based on the number of employees that you've reported on your application. What it seems like is it's been taking about 3 to 4 weeks for the turnaround from your application date to when you see the funds in your bank account. We haven't seen anybody actually get notified that the funds had been received in their bank, so people are having to proactively check their bank balances. And presumably what will happen in the next step is somebody from the SBA will contact you at some point after your EIDL advance has been funded to negotiate your loan amount. So that's, other than that, I'm not sure how to check on the status of an EIDL loan request. Jane, if you want to address that.
I know that everybody has had a really hard time because they just haven't been, the system hasn't been functioning well. It's kind of like it's shut down. It's tried to take everything in that people had put up and then start the processing. So we are seeing the improvement on people getting the advances and seeing more of those go through Hawaii businesses, which is very, very good. Because they had such a problem with this huge volume, it was decided earlier this week, or just yesterday, that there were going to be some formal notifications sent out by SBA, and they are supposed to be going by 3 methods. They are supposed to get something in the snail mail, they are supposed to get an email, and then following up, they're also supposed to get a phone call. So, and part of that is because the quality of the information that went into the system was not even or not clear. So some people have said, oh my gosh, I put a typo in my email address. So yeah, you're not going to get an email notification. So you need to kind of look at all those methods. Are those going to be delivered to you before you get your advance, possibly, or a notification that could tell you that there's a deficiency, maybe there's a problem with your credit, because there are different application standards for the EIDL than there are for the PPP. So, and that is also, as Stacy said, you have some negotiation ability when you either get an approval or you have some discussion. So it's not over yet. If you haven't heard, it doesn't mean you're out of there. A little tip on if you did get an ID number or a notification number when you submitted your application, it's a 9 or 10 digit number. If it begins with a 3, you should be moved into the queue for processing. If it begins with a 2, when that portal opens up, go in and update your information, because that is also, you are early on and you may have some deficiencies in your application, or you may need to just bring it in online with some of the changes that happened to the EIDL when the CARES Act was approved. So as I said, it's not over yet, but go and check. You can go to sba.gov, again, click on the top, check COVID-19 response. Don't go to EIDLs, COVID-19, and then you select economic injury disaster loan there.
Great,
And
thank you,
hopefully
Jane.
that'll help a little bit.
Yeah. A couple final comments before I close it out. I'll answer one more question live, which relates to union businesses that end up paying benefits through the union contract, and whether they're calculated in payroll costs. So to the extent that those payments of union benefits, et cetera, to the extent they relate to health insurance, retirement, vacation, essentially the items that are permitted under payroll costs, then yes, those would count. But if they are payments that relate to some other purpose, then they will not.
Addition
one
there,
other, go ahead.
Darren, on that. Most union collective bargaining agreements require contributions based on the hours worked during the prior month. So the union companies may have a little bit easier time allocating the expenses they incurred and the payments they make. For example, for this month, they may have right about by now the contributions due for the hours worked last month. And so for those hours of work that result in a contribution obligation and the payments made within the 8-week period, they clearly have a basis for including those to the health and welfare fund, the annuity, the retirement, not so much for the training or other sorts of funds.
Got it. Thank you, Jeff. Final thought, today President Trump held a press conference directly related to PPP. Mnuchin was present. I just have two thoughts on that. One is there was a hyper focus on the PPP having the intended effect of bringing workers back and putting them back onto payroll. That was clearly the thematic element of it. And number two, it was just very entertaining. So if you find a recording of that, feel free to check it out. Last comments, our next webinar will be Friday at 2 o'clock at our normal time. Hopefully we will have some actual guidance on forgiveness from Treasury and SBA. Evan, Bethan Kozlovich, and Trisha Kajimura from Kahimohala have launched a video support series. There is a link to that I believe is posted. For those of you looking for volunteer efforts for your employees or otherwise, feel free to contact Buddy. I think there's a link for that as well. And to all of our team, thank you for your continued efforts and volunteerism. It's been fun working together. And to all of you out there, stay safe, and we will see you on Friday. Thank you.